Let's pick up with Jim Rogers. Jim is the chairman of Rogers Holdings. He joins us on the camera out of Singapore. Jim, good to catch up with you once again here. Look, Steve's just run through the numbers for the first half of the year. What do you think that tells us, if anything, about the outlook for the rest of 2010?
Doesn't tell me much. You have to look forward, Jeff, if you're worried about markets. And markets are looking ahead to more difficulties in the financial markets. We haven't finished our problems. We've just papered them over.
We've papered them over, Jim, but do the problems get worse from here? I mean, we had Barroso talking earlier, as you probably will have heard as you were sitting down to get wired up here. He thinks that the ECB has steadied the ship with its refunding operations for the Eurozone banks, that we do have at this point a base from which we can rebuild growth in Europe and in other parts of the world, and we shouldn't be concerned about a second-round slowdown.
Well, I don't quite see that myself. You know, we now have worse problems than we had before. Jeff, the idea that you can solve a problem of too much consumption and too much debt with more debt and more consumption defies comprehension. I mean, America's quintupled its debt or something. The UK is, who knows how much you've increased your debt. This is a problem. The people who receive the money think things are better, and they are better for them. But the rest of us are worse off and are going to have to pay the price.
Morning, Jim. It's Ralph Silva here. I was wondering if you can give us your opinion as to which parts of the world you see as the best places to invest. Quite clearly, it's not the whole world that's in dire straits. There have to be some pockets around the world where there's some positive growth.
Well, my investment outlook is I am long commodities and short stocks. I don't own stocks in many places at all. I think that if the world gets better, the commodities will do better because shortages are developing. If the world doesn't get better, the world economy doesn't get better, they're going to print a lot of money, and that's always been good for real assets. The assets are in Asia. The creditor nations are all in Asia now. China, Korea, Taiwan, Hong Kong, Singapore. I mean, this is where the money is, so I'd rather be invested here than in, you know where the debtors are, and you know who they are. I'd rather be invested with the creditors than with the debtors.
Well, Jim, I'm an entrepreneur, and a lot of the entrepreneurs that I talk to are having significant problems recapitalizing their organizations, and God forbid you even try to put up a new plant or something like that. There's just simply no money. But I think a lot of the focus of that is really in the Western world, in the UK, in France, Germany, and the US. But there have to be some kind of opportunity, some kind of industry segments that are going to look better than others. Can you give us an idea of where we're going to see some new innovation or where we would invest to get those kind of returns?
Yeah, well, certainly agriculture. You should all become farmers. Agriculture is going to become one of the most exciting industries in the next 30 years. Agriculture has been a disaster for 30 years. We even have a shortage of farmers now. All these guys who went and got MBAs made a mistake. They should have gotten agriculture or mining degrees. There are huge opportunities in the world, but they're certainly not in the financial sector.
Jim, it's good to see you. As you and I both know full well, for markets to be able to move onwards and upwards, and I appreciate your holding on equities, you have to have clarity, you have to have honesty in what actually is going on. At least in Europe now, people are getting to grips with the situation as it is, rather than denying there is a problem. Isn't this a stage further than we were a couple of years ago, and hence a stage nearer to being able to be put in a position that's long in equities?
Well, absolutely. Of course, Steve. We now know that Greece is bankrupt. We now know that many countries and states in the U.S. have been lying about their financial situation. Many companies. Yes, it's good to know that things are bad. But now we have to figure out how bad they really are. And we have to figure out, you know, you said that people are, it's good to be honest, but governments keep telling us things are fine. In the United States, the same people are telling us fine who told us there was no problem with housing in 2007, who said there was no problem with subprime mortgages in 2008. Why would you listen to these people?
Well, Jim, I mean, I don't necessarily listen to them, but I do look at some of the more recent events, including this refinancing or this paying back of ECB loans yesterday. I don't know if it escaped your notice, but actually out of 1,171 banks, or 1,121 banks that borrowed money a year ago, only 171 banks had to borrow the money on a 3-month basis going forward. That gives us clarity and lets us know exactly where the problem is. Surely it gives us an opportunity to take a look at the other banks and say maybe some of these are a buy.
Steve, I said that. I said that governments have poured huge amounts of money into the system. The people who've received that money think things are better off. And they are better off for those people. But Steve, that's not the whole world. So that money has to come from somewhere, and the people who are putting up that money, or the people who are going to have to pay back that money, they're worse off. This is not over yet. The debts have gone higher. I cannot conceive that you can solve a problem of debt, too much debt, by borrowing money. It just doesn't make sense to me. Maybe it does to CNBC, but not to me.
Jim, a couple of emails in on the deflation vs inflation argument, and that seems really at the core of how you allocate your capital over the coming years. When do you think inflation is likely to pick up? When is the Fed going to start cranking up the printing presses and creating inflation? And will it work, given that debt clearly creates a reluctance to consume?
Well, Jeff, we have inflation now. I mean, anybody who shops knows that there's inflation, whether it's for education or entertainment or health care or petrol. I mean, prices are going up. Some governments lie about it. The UK government, the US government lie about it. But, you know, Norway and Australia and India and China, I mean, many countries acknowledge that there's inflation in the situation, and there is. And it's just going to continue to get worse as shortages continue to get worse. I mean, food price, Jeff, you don't go to the shop and buy things because your butler does your shopping for you, but the rest of us know that food prices are going through the roof.
Jim, I just knew
and
that
they're going to get worse.
I just knew that was coming, and I just don't have a butler. It's just not true. But you bear with us. We're going to come back to you.